Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Thank you. I just wanted to leave a little bit of time for questions. So I'm not sure if you have any time to answer maybe a couple of questions, but there were some asking about what would happen to the dollar if there were a significant financial shock comparable to the subprime crisis caused by a negative surprise on prime commercial mortgages. This is from Joel.
Yeah, I don't know what's going to happen, but I think what we are seeing in a very deflationary environment, which we're kind of in, as interest rate yields continue to normalize or crush down together. If we see that type of shock again, I think it'll be very similar to the subprime shock in terms of money flow. I think you'd see money flow again back into the U.S. Treasuries in order to, as a safe haven. I don't think it'll be the same type of extreme we saw that surprised everybody with the credit crunch, but it would be a fairly powerful support for the U.S. dollar in here, and should at least allow it to rally intermediate term on that. Obviously, the U.S. dollar needs some real fundamentals behind it to move back into a bull market move, but that could be a real driver right there. And it's a great question, and I think it's something that people are looking past a bit. We know that commercial real estate is really getting in trouble, and I think it's a great point because the banks have a lot of exposure there that I don't think has been made clear in the marketplace.
Andrew had one question about why the GBP is still above parity with the U.S. dollar.
Why the British pound?
Yes, the British pound, sorry.
Again, that's something that I can't answer. Given the yield backdrop, in the pound, which is really quite low now, it's really coming off the table in the British pound. Short-term yield, the short-term yield differential in the pound in terms of if you look at the long-term yield, the real yields in the pound are 1.87% when you factor in positive inflation in the UK. That's one of those that I can't define. We ultimately think long-term because of the yield differential in the pound and the negative growth and the still amount of debt still in the system and the exposure of the UK banking system. We ultimately think longer-term that will pressure the pound lower. Near-term, we've been very surprised by the move higher in the pound.
Great. One more question: how to check money flow?
How to check money flow. In terms of money flow, there is no standard indicator that one holy grail. Unfortunately, those things tend to lag. If we want to look at, you tend to see portfolio flows into the U.S. and into the U.S. bonds on a lagging basis. You have different monthly measures on that, and that's really about sometimes the best you can do. What you can do on a regular basis is just watch the movement of the 10-year notes and just get an indication of what type of money is tending to move into the market by the movement in the 10-year notes. Again, not always an easy indicator, but money flow in terms of going into the various currencies, I think the best single view of that in terms of trader interest in a particular trend one way or another can be seen in the Chicago Mercantile Exchange, the open interest numbers there. I think if you track those every day or at least on a weekly basis, follow those, you'll get an indication of money flowing into various currencies in line with the trend. For example, the Australian dollar is approaching its high again here. You see very high relative open interest in the Australian dollar compared to some of the other currencies, which tells you that a lot of people are on this trade, a lot of people are riding this trend, and most people that want to be in the trade are in the trade. And if we see a negative real surprise somewhere on interest rates or something in Australia, then it may be a driver or time, for a correction, and that's the way we tend to use, our money flow data.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.